tonight we have an exclusive interview here on Bloomberg Television with Axel Weber, the president of the Bundesbank. Our economics editor, David Tweed, spoke to him. He joins me now to tell me what he had to say. David.
Well, I met with him with a couple of my colleagues, or our colleagues from Bloomberg in Frankfurt. We went to the Bundesbank. And we spoke to Mr. Weber, and we covered a whole lot of issues, but we started talking about German growth, we spoke about European growth. I think something very important was to talk about the timing of the exit from the central bank's unconventional measures to provide banks with funding and liquidity. And of course we asked him about whether he wants to be the next central bank president. Of course. Let's have a look.
If you, for example, take the performance in Europe, including Germany, it was 1%. If you exclude Germany, it was 0.4. That has to be seen against a performance in the first quarter of 0.2. So Germany is going to have an effect on the entire European development, a positive effect. We may see some modest upward revision, not as strong as the one we've seen in Germany for both this year and also to some degree next year for Europe as a whole, against the background also that Europe is going to have moderate inflation developments, not much out of sync with what we projected before, 1.5%. Price stability, moderate growth, that's our view for the next 2 years.
But while they're doing their fiscal consolidation that's going to depress growth, you're going to get an exaggeration of this divergence. Is that going to be an issue?
If you look at the action that needs to be taken, it will partly be helped by a weaker momentum of Germany going forward. So what we've seen in the second quarter helped us rebound, but let me remind you, Germany also fell last year by an unprecedented 4.7% in GDP, and we have now in Germany, with a very good second quarter, made up for half of that fall in GDP levels. We're not yet back to pre-crisis levels. Other countries, the southern peripheral countries, have not fallen as strongly because they're not as export-oriented and dependent as Germany. So they have a better ratio where GDP still is relative to pre-crisis level. And the main policy challenge for them, first things first, is fiscal consolidation.
Is this going to present a problem for the ECB? For example, aren't we going to need different interest rate levels in Germany compared with, say, Spain or Portugal?
The problems emerging from the divergence performance are not a problem for monetary policy because we have a different mandate, but they firmly put governments on the spot to act decisively on both long-term reforms fostering growth and short-term consolidation, which I think has undermined some of the credibility these countries have in the market.
Looking at the financial markets now compared with where they were back in May, the height of the crisis, they've calmed down considerably. Is it time to actually start thinking about exiting from the ECB's unconventional measures?
Most of these discussions about continuation of exit will focus, I think, will be focused on the first quarter. And we've always said the exit from these measures is very state dependent. It will depend on the fragility of financial markets. And if financial markets remain robust, despite the withdrawal of some of these measures, I think the issue will be on the table what measures to withdraw next.
Mr. Weber, you're considered to be one of the front runners to take over the job at the ECB presidency of Monsieur Trichet. Given the controversy that surrounded your comments back when you were criticising the bond purchases in public, do you think you're enough of a diplomat to actually have that job?
We have a very good president of the ECB. He has more than 1 year of term left, and we should focus on solving the financial market problems that lie ahead. We should forget about these personal debates. They're not what is helpful at this stage. We're in year 4 of the crisis. I think it's very important for central banks to be clearly focused and also, if necessary, to deliver undiplomatic messages to governments. So in my view, it's important to be a diplomat for the diplomatic corps. It's not so important for a central bank. One of the central bankers I've always admired was Paul Volcker. You can call him anything, but not a diplomat. So I think it's very important central banks to have a strong view, to basically stand for that view, and even if it means that sometimes to focus on what you need to achieve, and that is price stability first and foremost. That sometimes requires also to put diplomacy at the back seat and a clear focus and an outlook at the front.
Axel Weber there talking to our economics editor, David Tweed. And David is with me now to talk a little bit more about that exclusive interview. What did you take away from it? What did you think that Axel Weber's main message was?
Well, look, there were a couple of things. One was about the outlook for European growth after we had those big numbers from Germany. Does see a slowdown in the second half for Germany and for Europe, but he doesn't see a double dip. He thinks that the risk of falling back into a recession is very low. Does see price stability ahead, thinks that interest rates are appropriate at the moment. Secondly, this whole issue of divergence and whether that's going to... growth divergence, fast growth in Germany, slow growth in the peripheral nations, is that going to be a problem for the ECB? No. That's a problem for the national governments. The national governments have to put in place the measures in order to improve competition and get their get their countries growing again.
Yeah.
That was also pretty interesting what he had to say there.
Talking about the ECB, of course, you pressed him on whether or not he would like that role. He talked about, I think she thought his answer was quite diplomatic, while he talked about how you didn't need to be a diplomat.
Well, it was interesting how he handled that. Well, he's interesting how, because when we directly said to him, do you want to be the ECB president, he does say, I mean, I've got a job to do at the Bundesbank. I've got 1.5 years to go, and I'm going to focus on that job and look at my options in the future.
But then when did any politician ever say, oh yes, I'd like the leadership, please, until they actually declare, you know?
Yeah, and it was, but I thought it was also just, in general, him talking about the role of diplomacy for a banker, and saying that actually for a banker, it's a banker's role to present the hard news to governments, or to actually present, you know, to actually be undiplomatic. So
and he used
I thought
Paul
that was
Volcker as an example.
At Paul Volcker as an example, of course, never diplomatic. The other thing that I just wanted to mention too, which I thought was interesting as a takeaway from the interview, was just about the timing of the exit strategy,
Yes.
how he doesn't see that happening until, doesn't think that the conversation should start until the beginning of the first quarter, which sort of indicates that he's fairly optimistic about the way that the financial markets are going now.
David, thank you very much indeed.